All right. Welcome, everyone. Welcome you to today's webinar. By the way, thanks for being here early. Don't worry, we have not officially started, but I want to jump in and say thanks for being here early. My name is Brian D'Amico. I am joined by Jim Penna. The two of us will be running today's webinar. So welcome and thanks for being here early. If you could, let us know that you could hear us and you could see the screen. So the screen has a big number 3 on it with some eggs. So if you can hear me and you can see that screen, that'll let me and Jim know that everything is A-OK. So just in the chat box, you can give us a big yes. That'll work. Or some of you are typing some other things. That works. So thank you, Malcolm, James, Donald, Leland, Ron, Ralph, Vivian, Kenneth, Jeffrey, Brian, Mike. Man, the names are flying by. I'm sorry if I missed your name. So great to have you here. We've got about 4 minutes before we officially kick things off. So now's a great time to get ready. We're kind of getting acquainted here. I don't know about you, but I'm pretty excited about today's webinar. Jim and I, when we put this webinar together, we're like, this can really help people. And Jim's been doing this, many more years than I have as far as on the retirement side and the investing side of things. So you're in a great spot. So we will get started in just a couple of minutes. All right. And in the chat box, let us know where are you from? Where are you listening in from? Now, Jim and I are here in North Carolina, a little north of Charlotte. I've got to be careful when I say Jim and I. It comes across as Gemini. So we're a little north of Charlotte, North Carolina. It basically hasn't rained since 10 years ago. At least that's how it feels. So boys from Tennessee, welcome. I love visiting Tennessee. In fact, I'm going to Tennessee in March. So welcome, boys. Nolan from Utah. Alfred from Orlando. Frank, all the way from Belgium. Great. Brian, also from North Carolina. Great to have you here. Ron from Cleveland. We have an office up in Ohio. That's our secondary office, or actually our headquarters, even though it's got less employees up there. Keith from England. Great to have you. 2 people from England. Mike. All right. Mary from South Africa. Wow, we got people from all over the planet here at today's webinar. It's great to have you. Before we officially begin, let me give you, we call them the 3 gets. I want to tell you how to get the most out of today's session. All right, because Jim and we've got a lot of great things to go through. In fact, before I give you those three gets, let me just bring him in so you could hear his voice. Jim, is your mic working? Are you alive? All right. Everybody, that's Jim. So that way you could tell the 2 voices apart, because we're going to be doing this webinar together. So Jim, welcome. Great to have you.
Great to be here, and thank you to everybody who is taking the time to be here with us today. We look forward to a good strong hour, some great information. So thanks for being here, and we're looking forward to it.
Yeah. So we'll bring Jim, of course, will be tag teaming this webinar, so you'll hear his voice quite a bit today. So let me tell you how to get the most out of today's session. All right. So we got about 60 seconds before we officially begin. I call them the 3 gets. I usually like to do this before the webinars officially begin. So number 1, get pen, paper, and a drink. All right. So if you can only grab a pen and paper right away, do that, because we've got a lot of information to show you today, a lot of great techniques. It's called 3 techniques. So there's going to be three strategies, I should say, that we're going to be giving you in today's session. So 3 strategies for your retirement. So make sure you have something to take notes. Number 2, get rid of distractions. So if you have a cell phone, turn it off. At least make sure it's silenced, and maybe turn it upside down or flip it over so you don't see all the beeps and flashes and everything. Close your door, because you really want to focus for this next hour so that you can get ready to learn. All right, so that's the 3rd get ready to learn. Okay, so once you've done all those 3 things, I think we are ready to go. And let me look down at my clock. Perfect. It is 1 o'clock here on the East Coast of the United States. So let's officially get started. I'd like to officially welcome you to today's webinar titled 3 Strategies to Protect and Grow Your Retirement Nest Egg. All right. My name is Brian D'Amico. As I mentioned a moment ago before we officially started, I am joined by the manager of retirement services, Jim Penna. He is the manager of retirement services here at VectorVest, and we really feel that this webinar is of utmost importance for you. All right, whether you are currently retired, or maybe soon to be retired, or maybe even just in the planning stages, this webinar is extremely important for you. Our promise to you is that in today's webinar, you're going to see how you can retire with peace of mind, all right, knowing that you could steadily grow your portfolio, generate income, and preserve your capital. Those are the big three things that we'll be going over today. This information is such an important topic. Now, unfortunately, many people are just not ready for that secure retirement. Okay, but let me define secure retirement, because a lot of people throw out the term secure retirement, and some advisors or financial money managers define secure retirement as you have just enough money to get by. Our definition of secure retirement is one in which you have enough income to live the life that you desire. Not just enough money to get by, but enough money to live the life that you desire, and where work is optional. Like, you don't have to go back to work. Some people decide to still work, but work is optional, and retirement is affordable, and you could do the things that you want to do. Now, if you go out there and you just Google retirement planning, I just did this yesterday. I got 283 million results. Every time you turn around, there are these TV commercials out there talking about retirement, right? So there's a lot of information out there. It could become overwhelming. Our goal today is to cut through all that noise and everything else that's out there. And we're going to show you the three main things that you should be doing. So again, my name is Brian D'Amico. I am joined today by Jim Penna. You can see our faces there on the screen. As I said, he is the manager of retirement services here at VectorVest. This topic, I'm really passionate about this one, because now that I'm in my 40s, actually a few years ago, I got into my 40s. My kids are now getting closer to graduating high school. They're just a couple years away. I've already begun preparing for retirement, thinking about it, getting things ready. And I'm confident that everything Jim and I will be showing you today will help you. In fact, I did this before. Let me bring Jim back in really quick. Now, Jim, you've been doing this a long time, right?
Yeah, Brian, I've been here at VectorVest for 12 years now. A lot of that time here in the education department in retirement services. Just to give a quick background, I took my first Series 7 test back in my own Series 7 test back in 1992, and I worked on trading desk, trading stocks and options, and was a market maker at a big market making firm. So yeah, it's been quite a long time that I've been in the business. So and I tell folks that prior to that, 1992, two lifetimes ago, I was a police officer in my hometown of Connecticut. So if at any point during our webinar it sounds like I'm telling you what to do, it kind of comes from that back days. But that's just kind of a quick background, and
So you're definitely a guy to listen to, not only because of your knowledge on retirement, but because of your prior background. So definitely got a great resource here in Jim Penna. All right, so we love to interact during these webinars. So this quick little intro to this webinar. We feel you get so much more out of it when we do interact back and forth. So you've been great so far in the chat box, so let's keep that up. There's going to be a lot of times throughout today's webinar where we're going to ask you questions and get your feedback. So let's keep doing that throughout today's webinar. Now, we do have a lot of great information to share with you today. We're going to be here for about an hour. All right, so there's only so much we can cover in an hour. So at the end, if you want more help and you need more help, we'll point you in the right direction. Okay, so if you're good with all that, if you're good with everything that we covered so far, and you are ready to go, just like Jim and I are, in the chat box, give me one more yes, and it'll let me know that you're ready. I see William just showed up. Welcome, William, Melanie, Ellen, Tom, Paul, Zach. Welcome to all of you. All right, so let's start. We want to learn a little bit more about you. We want to make sure that this webinar, that you're in the right spot. So I'm going to give you how about 15 seconds in the chat box? What's been the hardest part for you about preparing for retirement? Or if you're already retired, what has been the hardest part? So I'm going to give you about 15 seconds. I know you might not be able to type super fast. Do your best in the chat box. What's been the hardest part? And based on what your answers will, number one, make sure you're in the right spot, and we'll be able to say, hey, we're going to be covering that in section number 4 or section number 3. Steven says avoiding large losses, consistent returns, says Jason. Finding good stocks. A couple of people saying not much right now. Money growth, says Malcolm. Preserving capital, making money, spending less money than I'm making. Hard to take profits. Just depending on mutual funds. Income, maintain. All right. So I'm seeing a lot of similar things. Before I give my summary, let me bring another set of eyes. Jim, what are you seeing in the chat?
Yeah, Brian, I'm seeing these come across, and there is definitely a theme here, and it really goes to a lot of what we're going to talk about today. So some folks are saying, finding, they want to grow their portfolio, finding the right stocks in one form or another has come up a bunch here. Protecting their portfolio, not losing money on days like today or these type of markets. So a lot of the answers here are really falling under that the same umbrella here, and so. One of them is a couple of them I've seen is having, Gail says, having time to watch the portfolio. So a lot of these things are going to be addressed here today. So I do think you guys are in the right place.
Yeah, I agree. And in fact, let's lay things out for everybody so they can see what's involved here. So Jim and I want you to have a retirement that gives you peace of mind. All right, and what I mean by peace of mind. So if you can, do you have a piece of paper handy, everybody? Your piece of paper that you've got, just draw 3 interlocking circles, or if you just want to take notes another way, that's fine. But take it on a full piece of paper, 3 big circles. What is this called? A Venn diagram? So 3 circles. And right in the center, we put POM. That stands for peace of mind. So everything that we're going to put here will help get to this peace of mind. And what we mean by peace of mind is a retirement that's going to give you enough money to do the things that you want. Right, so money is going to be one part. Time is another one. Time is going to be a second piece. And that means time to do the things that you want to do. And the third one is confidence. Confidence that you can pretty much handle any situation the market throws at you. Right now, the market's been dropping quite a bit the last few days. You've got to know that you can handle situations like that. Okay? So those are the 3 things. Now, to do that, there are 3 parts of your investing that you need to focus on. So we're going to now fill in the boxes. Number 1 is the way that you profit. In other words, the way you grow your capital. That's where you're primarily going to be focusing on strategies to make money when the market is going up or down. You're just profiting in up markets and down markets. Just think of it as growing your retirement portfolio, just accumulating more wealth. Now, the second piece is you need to focus on a way to provide income. All right, while you're still growing your portfolio, you need to create a steady cash flow. So you don't always want to be dipping into your main account to pay the bills or take a vacation. You want another source for that. And third, now perhaps the most important piece is the way that you preserve what you've got. You want to make sure that any loss you take is minimized and everything you do has minimal risk, and you know how to protect yourself. So to do this, there are 9 techniques. You can see how there's 3 sections for each box. There are 9 techniques that successful retirees use in their account. So I want to lay this out for you. Right? I want to lay out the map here. And then today, Jim and I will give you the shortcut to get there quickly. Okay? So when it comes to the profit side of things, right, so we're going to fill in the 3 boxes up at the top. When it comes to the profit side of things, the first thing that you need to focus on is using stocks and ETFs. You could use them both, stocks and ETFs, to make money in both up and down markets. Or you don't have to go shorting the market. You could buy stocks and you could buy ETFs in up markets. You could buy contra ETFs in down markets. But either way, we're going to be focusing on stocks and ETFs to profit. Now, once you've got that down, you're going to start using things like calls and puts. That way you could start to leverage your money. In other words, to make more by using less. Then, once you've got that down, you can start combining some calls and puts together into some multi-leg option trades to take advantage of some of the special cases that the market has. All right, so there's a building there. You're not going to start off with multi-leg option trades. You could start with stocks, get a good handle of that, then learn calls and puts, and then use multi-leg option trades. All of those are what successful retirees, once you get to the top level, you're doing all three things to profit. So now let's talk about the provide side. So there's going to be, again, three core areas that you're going to be focusing on to provide income. So first off is making sure that you have a plan to capitalize on dividends. I mean, that's the simplest way to generate some extra income. It might not generate enough to pay the mortgage all the time. Sometimes it is, depending on the stocks and how much money you've got invested. But dividends are going to be a way that you're going to provide some income. After that, you're going to start using things like covered calls to generate even more income. And then once you have that under your belt, if you want to ramp it up a little bit more, that's when you're going to get into things like credit spreads to generate even more income in both up and down markets. So again, there's a building there. Start with dividends, then add covered calls, and then the top levels when you're starting to do some more credit spreads. So now let's talk about the preserve side. The first thing you want to focus on is just hedging. Simple hedging, which is a form of protection when the market is in the early stages of transitioning from an up market to a down or vice versa. All right, so hedging is going to be one technique that we're going to be focusing on, or that you should focus on as a retiree. Then you're going to use things like puts and collars as another way to protect yourself from market pullbacks. These are also great ways to protect during things like earnings announcements. All right, so you're going to use puts and collars for preservation. And then lastly, you want to know some more advanced ways to repair trades just in case they go against you. So instead of just closing out a trade, there are some other things that you can do to minimize losses or even get losing trades to turn around. All right, so again, you're going to start off with hedging, then learn puts and collars and some advanced trade repair. So if you look at this, there are 9 things that all successful retirees at the top level do. Now, of course, as a retiree, you can start off with just a few, and that's what we're going to be focusing on today. And I saw something come into the chat box. What is POM? That all brings us to try and get peace of mind. Okay? So these are the 9 areas. So what I want you to do right now is take a quick snapshot of your current system. So ideally, you've written down these 9 things. So take your pen and put a check mark next to the part of your system where you feel you're pretty good at that. Right? And the things that are going well for you. And then if there's an area that's not working or you need a little work on, maybe just put a little X there to let you know that you've got to come back to that. So for example, if I get my pen out, let's say, I'm pretty good at stocks and ETFs, but, I don't really know how to use calls and puts or this. And, I know how to use puts and collars. I know how to hedge, but I don't know this one. And I got dividends down, but I don't quite know covered calls or this one. So that's just an example. Don't overthink it. Give yourself a check or an X. And 5 seconds. Go. 5, 4, 3, 2, 1. Okay. So what you've done here is basically set the odds of whether you can answer this question. Can I have peace of mind in my retirement? So in the chat box, let me know based on what you've got there, how close is your system to peace of mind? So maybe just tell me, I've got 3 out of 9 check marks. I've got 1 out of 9. I've got 8 out of 9. So in the chat box, let us know. Jamal, your first one in, Jamal. Jamal says 3 out of 9. 30% says Jeffrey. Mura says 8. Awesome, Mura. 2 out of 9 says Jason. I see a couple of 4 out of 9s coming in. 2s, 7s, 4s. Tom says I'm missing the hedging part. I got about half, says John. All right. So if you want to get to that next stage, right? If you want to become, the ultimate retirement, you'd have 9 out of 9. Okay? So if you look at this, there are 9 projects successful retirees use in their retirement account. Jim and I promised you on this call that we'd give you the strategies to help you get the fastest results. Because in an hour, we can't teach you all 9. So those are the 9 things. But if you did have to shortcut this in this hour that we've got, there's going to be a few things that you'd focus on first. And these are going to be your must-haves. So number 1 would be you need to have a profit plan using stocks to grow your portfolio. So we're going to talk about that today. Second, you need to look to provide. So we're going to be focusing on 2 areas. That way you have a way to generate some steady income. You'll focus on dividends and covered calls here, and that's what we're going to do today. And then lastly, on the preserve side of things, where you want to preserve your capital, there we're going to be focusing on puts and collars. All right, this is a trade everyone can do to protect against big losses. So we're going to be looking at protective puts today. We won't have time to get into the collars side, but you'll learn protective puts. So we're going to do those today. That's our plan. So if that sound good, give me in the chat box. Sound good to you to be doing? Jason's like, yes, boys, yes. I see a bunch of yeses flying through. All right, so as I said, we're going to be doing the profit side first. The profit side first. So the first things you'll be focusing on is using stocks and ETFs to profit in the market. Primarily today, we're going to be focusing on stocks. We're not going to get into the ETFs part of things in today's session. So today we're going to focus on making money when the market's going up, and to do it in a way so that you provide, profit. Not provide. You're going to profit nicely in up markets. Okay? And the cool thing about what we're going to do here is when the market turns against us, like right now, the market's been going down quite heavily over the past few days. By being in the right stocks, when the market turns, it also helps to minimize risk because we're not going to be in super risky positions. So to do that, we've got to play it safe. We're going to focus on safety first. So in other words, for our retirement account, primarily our growth portfolio, you want to look primarily at a company's safety more than anything else. It's always fun to try to hit the home run and go for the 100% gainers. Try to hit that home run. But if you think about it, most people who try to hit home runs strike out more than they do anything else. You don't want to strike out, especially if you have limited funds to protect. So the home run is enticing to some people that when they go out, they start investing like somebody they're really not. You want to be a safe, conservative retiree planning for retirement, but you go out there and you become like this day trader, swing trading, short-term trading, and it's just somebody you're totally not. I always tell people the answer isn't to go faster. So if you're struggling, you're not getting the returns you want, the answer is not to go faster. It's not to become a day trader or short-term swing trader. It's to slow things down. Like right now, I'm teaching my son. He's 15. I'm teaching him how to drive. And I don't tell him to slam his foot on the gas pedal if he's struggling. I say, hey, let's slow things down. So you're going to do the same thing as an investor. It starts with this quote. Good portfolio management starts with buying the right stocks. By the founder of VectorVest, Dr. Bart DeLito. Dr. Delito's analogy is filling a sports team with all-star players. Just by having really good players on the team will help the team do well. So we're going to do that with our portfolio. We're going to fill it with all-star stocks, really good stocks. So let's do something here. I want to get you some practice at picking out some good stocks, and we're going to discuss what makes them good and what makes them not good. So we like to say which looks better, A or B. It's like the eye test. So stock A, so here's stock A, and here's B. So I'm going to flip back and forth. There's B, there's A. Yes, everybody's saying B. All right, so first off, what do we not like about A? Well, it's in a downtrend. Right? Even though the retail industry right now had been doing well, this stock is not. This is going down, it's going down. Earnings is going down. This is another thing here at VectorVest. We look at earnings per share. Yeah, earnings is definitely going the wrong way, as Jeffrey typed into the chat box. Whereas a stock like this is hitting higher highs, higher lows, going up, rising earnings. Earnings is the engine. Earnings is the engine. So remember that. So when you're looking for safety, earnings is the engine that's going to be driving stocks higher. Jim, in just a minute, will add more to it. All right, we're going to fill in some of the blanks, but this is just the eye test here. Some of the things that you should be looking out for. Here's A. Here's B. Here's A with Tupperware. Here's B. Yeah, everybody's Ruben, Franz, boys. Yeah, B. I mean, look at this. These are the types of stocks you'd love to have in your retirement portfolio that there's steadily climb over time. And the thing that helps is rising earnings. Look at this. Do you want a thing that this is for what? 3 years this stock went nowhere and then it's in a decline. You don't want that in your retirement portfolio. And I'm just going to do this one really quick. Here's A and here's B. The thing I wanted to point out with this, not only does it have negative earnings, I want you to look out for this. And Jim will talk about this more in just a minute. No data. You want to be looking at stocks and companies that have a track record. And if you find a company, even though it might be hot right now, that has only been around for a few months, it's not giving you that history to feel comfortable as a retiree. All right? So all of the stocks that you mentioned, all of you were typing in B. You like B, B, B. What did those stocks have in common? Well, they all passed our stock safety checklist. This is what we look at for the stocks to fill our retirement portfolio. So you can have a piece of paper, write this down, and what I'm going to do is I'm going to bring Jim in because Jim has a great way of going through each one of these and giving you a little bit more information. So Jim, as somebody who helps retirees, why don't you help them out a little bit? And what is specifically about each one of these 6 things that they need to be looking for?
Yeah, thanks, Brian. Yeah, I want to take a second and talk about stock safety. VectorVest has a great way to rank and analyze stocks by a safety indicator. There's a lot that goes into that, and I want to just take a minute or two to talk about these things. We'll start with earnings consistency. Brian just visualized it for you. Earnings is what drives the individual stocks, it's what drives the market. So earnings consistency. Okay. either have to lower it or not pay that dividend because of their financial performance. So we take that into account when we look at the safety of a stock. And then finally, debt to equity ratio. That's just balance sheet stuff, right? Total liabilities, total equity in a company. It's a great sign of, can a company, if something goes wrong, whether it's specific to the company or if it's just generally market oriented, will it be able to take care of any headwinds that might come? A company with a more favorable debt to equity ratio is much more likely to withstand those kind of headwinds. So throughout the rest of our time together, you're going to hear the phrase relative safety. I believe it's extremely important that you understand what goes into that when we mention that. Back to Brad.
Yeah, that's awesome. So I see people are typing in the chat box about doing this type of analysis. And one of the things here at VectorVest that we feel, like Jim says, is important is not to spend a ton of time doing it. Because if you go out there and you're focusing on gathering all this data yourself, you could get buried by the market with data. Now, one of the things Jim mentioned is a thing called relative safety. Let me ask you this in the chat box. This happens to be an indicator that VectorVest has. In the chat box, some of you are here today and you already use this tool called VectorVest. Some of you don't. If you don't, that's fine. We're still going to be teaching you strategies for retirement. I'm just curious. In the chat box, give me a yes if you currently use VectorVest in one form or another, or no if you don't. And now, if I see like everybody types in yes, it'll give me an idea of how much we. Okay, so it looks to me about probably 95 or more percent are yeses. There's a couple of no's. I see Gail and so on say no. That is fine. What you're going to see, maybe it'll give you an idea of things that are possible. So maybe you could try out VectorVest in the future. What we've got here at VectorVest is a thing called relative safety. And that, if you think about it like a mixing pot, it takes all those things that Jim just mentioned that go into our safety checklist and puts it into one indicator that makes it super simple. Just very quickly, it's a 0 to 2 scale. Anything above 1 is good. The farther above 1, the better. Right? Typically, anytime you're getting above 1.39 into the 1.4s, that is awesome. That's excellent. Right? So that's what we look for the types of stocks for your portfolio. So if you see a stock that has a relative safety of 1.39, 1.4, 1.45, if you go back to that checklist, it's basically checking all of these boxes. So just with one number, it's checking all those boxes for you. All right. There's some searches that we've got, inside of VectorVest that streamline it without getting into all the details. Like this one search has relative safety greater than 1.4. Without getting into all the parameters of this search, which happens to be one of my favorite searches, by the way, called ruler stocks. Jim, how important is a search like that? You actually met a gentleman at a seminar who it's better if you just tell the story.
Yeah, this is a great search, and it really epitomizes the power of the type of analysis that we do. And actually, when I started at VectorVest, the first time I ever did a strategy of the week or a special presentation was actually on ruler stocks about 11 or 12 years ago. But yeah, here's how important relative safety is when it comes to finding good quality, fundamentally sound stocks. I was conducting a seminar. I think I was in
Yeah, that's awesome. Like, to have them in the top 10 of this, which is one click. So one of the cool things about what we do here is we don't just like run a search and say buy stocks. We actually build an entire management system around this. So this is what you should be doing as a retiree. Let me go over here. We've got a whole growth strategy. Remember, we're talking about the profit side of things. So a growth portfolio based on high safety stocks. So if I could just boil it down to this. All right. Whether you're on this webinar and you're new to VectorVest or you've been with us a while, I want you just to know that here at VectorVest, our system generates signals in the market. And our most conservative signal that we got is called a confirmed call. In fact, we just got a confirmed down call not that long ago, like a week or two ago. All right, we had a confirmed down call, and when that signal is up, right, that tells us it's okay to buy high safety stocks. All right, so let me just show you that here. When the confirmed signal is up, it's okay to be buying high safety stocks. That's what we're doing in our growth portfolio. The main thing we try to get across to everybody is when that signal turns to down, one of the simplest things that you should do is just stop buying. You don't have to sell everything. You can manage things. There's other things that we teach, which some of those we'll get into later in today's webinar. Just don't buy. If you stop buying, that's one great way to protect yourself. You just manage the stocks that you own, and then when the market turns around and starts to go back up, you could start adding to your portfolio again. What I did is we have a pre-built system that does this. I actually started one earlier this year, and it just runs on automation using certain rules. I named it Growth Portfolio because it uses one of our growth techniques. But the main thing that we're trying to get across here is look at the stocks. Look at the safety of these stocks that it's managing, all above 1.3. Okay, so this is just this year. I took this a couple days ago. It's pulled back a little bit since the market's been pulling back the past couple of days. But you see it was up 15% a couple days ago. And look at the shape compared to what the market's been up and down in wild swings. Now, the other thing you might be thinking is, all right, well, that's great for this year, but do these high safety stocks, is this a long-term strategy? Well, of course. That's why they're high safety. In fact, Jim, he actually has an entire coaching group, and we're not going to get into all the fine details, but you can see here, again, this is his portfolio using those types of stocks, all high safety stocks. This is since January 2013, and you can see this is what you're looking to get with high safety stocks. It's not always directly up. There's some pullbacks in here, but it's a slow, steady climb to higher highs over time. And this is another strategy that Jim uses with his clients. It's high growth types of high safety type of stocks. This one you can see up over 150%. So the point we're trying to get across here is replace the roller coaster ride. The way that you replace the roller coaster ride is, and you get that steady climb, is by focusing on safety, using management techniques of buying when the market's going up, not buying when it's going down, and reasonable sell criteria. We do have those things built into some management plans built into VectorVest. This is one piece that allows you to do that safe, steady climb over time. All right, remember, we were talking about one profit piece today. The next piece we need is to get income. Right? You need to focus on getting income. Now, primarily in today's session, we're going to be focusing on dividends and covered calls to provide that income. All right, so this is a way to generate some disposable income to help do those little things that you want to do. Go out to dinner, go on vacation, just kind of help you continue to live the lifestyle that you want. So we're going to first talk about getting paid with dividends. All right, so one of the benefits in focusing on these really safe stocks is that they typically pay a nice dividend. And you want to capitalize on that. Right. Everybody talks about dividends, right? You Google it. Everybody's talking about dividends, finding the best dividend paying companies. But for a lot of people, it's not the easiest thing to do. If you just go out on the internet and you Google good dividend stocks, you're going to get 850,000 results, and you're going to get a list of high yielding stocks. But are they safe? Is the dividend safe? Is the company safe? You don't quite know. If you go to places like NASDAQ or even like dividend.com, you're still not getting the information that you need. You're getting typically the highest yielding stocks, but yield is not everything if the safety is not there. So let me show you one of the things that we do here at VectorVest that you should be doing as well and that you should utilize to help you find those dividend stocks. There's a thing, not just in VectorVest, but we actually group it for you in VectorVest. It's called DRIP. It stands for Dividend Reinvestment Plan. Yes, they have a thing where you can reinvest the dividends, but that's not the main thing that makes these things important. You can see they're categorized 5 to 9, 10 to 24, 25 plus. I'm going to bring Jim in. Jim, what, other than the reinvestment part, why are these categories here so important for people to be looking at?
Well, Brian, one of the great things about where you are in the viewers tab and being able to look at these watch lists is that we're able to categorize these and separate them. This is maybe the most important one as far as dividend goes, dividends. Again, this is called the DRIP 25 plus. So Brian just described DRIP as dividend reinvestment plan, all these stocks through your broker. It's a good idea to get that compounding power and reinvest your dividends. But more importantly, or just as importantly, what I'd like to talk about for a second is what that 25 plus years mean. And what it means is that every company on this list has not only paid, but have grown their dividends annually for at least the last 25 years, some of them 40, 50, 60 years or more. Okay, so that's the importance of this list. So when we talk about dividend history, I said earlier, there's no worse gut punch for a company than to start to pull back their dividends or not grow them, or even worse, not pay them for a while. These are what's called the 25 plus, or referred to in the industry as the dividend aristocrats. And so these are the type of stocks we want to focus on. Now, there's that DRIP 10 to 24 years, also a good one. It's finding those stocks as they build that history. So it could be anywhere from 10 to 24 years. Those stocks have not only paid but grown their dividends as well. And these are what I would refer to as obviously more mature stocks. Any of these companies with this type of dividend history usually have a strong cash flow and have that history of giving back to their shareholders with dividends and growing those dividends. So you'll see relative safety may not always be, the top stock there as of this screenshot, which was earlier this year, has an RS of 1.41, but you'll also see some that are a little bit lower, 1.03, 1.1. There's a couple that are down there. It's an important factor for these type of stocks. But keeping in mind that these dividend paying stocks, when that's our objective is to collect the dividends, sometimes the RS numbers aren't the same as they are for the growth portfolios. So we look at things like dividend growth. We look at things as earnings growth rates, as you see GRT over there to the right of the recommendation column. That's earnings growth rate. These are very important numbers when we're considering dividend paying stocks.
Yep.
Great roster of stocks there to consider.
And the cool thing, another cool thing, I guess I should say, is we're not just throwing it in front of you by sorted by yield, right? I mean, you're getting it with the analysis of, all right, these guys pay a nice dividend, they grow their dividends, and like Jim was saying, they're sorted and ranked and analyzed for you. So
Yeah, and one more point, right? Yeah, you were exactly right. When you were showing those Google pages, right, every one of them was just sorted by the yield. And one of the big mistakes folks will make is chase that yield just because it has the highest yield. Remember, yield and price the dividend yield works in correlation with the price of the stock. There's an inverse relationship, right? The higher yield may mean that the stock just doesn't perform well, and the stock has gone down. That will cause the dividend yield to go up. We don't want to chase those type of stocks, right? So you have to be careful just chasing high yield.
yep. So this is kind of what you would see with these stocks, the stair stepping of growing of their dividends. There's also some searches in Vectra, some of our favorite look at these drip watch lists that have these high yielding stocks. and or sorry, these stocks that not excuse me, I said that wrong. These companies that have grown their yield consistently year in year out for year on for years, right? So we've got some of our favorite searches here. In fact, Jim actually runs in his coaching group has a portfolio focused on getting dividends. And here you can see the portfolio itself, just capital appreciation over the past, what is this, 6 years or so, is up 114%. But then you add in dividends, Jim was calculating it, it added another $30,000 in dividend payouts. So that added in this portfolio another like 30%. All right, so that's how important it is to be making sure you're also collecting dividends. So if you had a choice between two stocks that were all things being equal, except one paid the dividend and one didn't, you probably want to lean to the one that paid that dividend. All right, so in today's session, I said we're going to be talking about two ways to be collecting income. One was the dividends, right? Having a way to pick those stocks and manage those stocks as part of your retirement portfolio. Another way is to do what we call is collect rent. Right now, a lot of you have probably heard the term covered call. That's going to be a way that you're going to collect rent on stocks you own. All right, so selling covered calls on stocks is an excellent way to generate some income. Okay, let's talk about what is a covered call. All right, so this is a quick little overview of what a covered call is. I'm going to do the best job we can in the time that we've got to get you up to speed on what covered calls are so that you know you could do them. You could do these types of trades in retirement accounts. All right, so what is a covered call? Well, a covered call, think of it this way. You either own, right? You either own the stock already, right? You either own it, or you buy shares of the stock. Now, for each call that you trade or that you sell, you would have to own 100 shares of that stock. So in this example, you own or buy 100 shares of a stock. In this example, I'm using Lulu. Right? This is a trade that Jim and his retirement team, his coaching group, they actually did earlier this year. So I'm using it as an example. So, and basically, Jim every week is giving a covered call trade. They're doing a covered call trade for income in his little coaching group that we run. So here's Lulu. So let's say it was trading at 176, so you buy Lulu at 176. Right, so you buy 100 shares. What a covered call involves is not just buying the 100 shares, but selling a call. Right? You sell a call with a strike price above that stock's price. We like to do that because we're overall bullish on the stock. We like to get a little bit of capital appreciation, but that's not the main thing. We want income. This is an income trade. Right? So we're primarily focused on income. So we're selling the call. The stock was at 176. We sell a call a little bit above that at 180. Based on what we received $1,000 for selling that call. All right, so let's just get you up to speed on what could happen when you sell a covered call. All right, well, if the stock goes down, well, that's not good, right? Because you own the stock. But the profits from the call that you sold help minimize the losses. So that by selling the covered call, it helps minimize losses on a stock that pulls back on you. Well, if the stock goes sideways, you're making profits on the call you sold. Plus, you can then sell another covered call later on since you still own the stock. Once expiration date comes, you could still just sell another one. And then if the stock goes up, you make profits on the stock because you bought it down here at 176. Your strike price is 180, so you'd have to deliver the stock to somebody else at 180. So you just made $4 a share, plus you get to keep the premium, the $1,000. So let's look at what did happen. All right, so I got to update this number here. So that's actually 1,400. Let me just do that really quick. Hold on one second. There we go. Let's see. Bum, bum, bum. You can see I got to update my math. Hold on 1 second. The beauty of a live webinar, right? Hold on 1 second. Doot, doot, doot. 1,433. How's that? Okay. Poof. It's changed. All right. So at expiration, so when expiration date came, you notice during that time the stock actually pulled back and then went up. So when the expiration date came, Lulu closed at 181. All right, let me get my laser pointer back out. Laser pointer. Closed at 181. So you would have made 400 in capital appreciation because the stock went from 176 and you had to deliver it to somebody else at 180. It was called away. So that's $4 a share, and you got to keep the $1,000 in premium. So that's a gain of $1,433. Okay. Now this is a trade that we actually did in our coaching group. Like I said, Jim does these trades every week with his clients, and you can see Frank. Now Frank actually did a covered call on Lulu. He did 2 contracts, so he generated almost twice that. But he said on our we have a private Facebook page. Frank was like, "Hey, I just closed my Lulu covered call today at 93% profit target," and he's got some other covered calls going on. But these are trades that you could be doing over and over again just to get that extra little premium, extra little income in your account. So a lot of investors who are getting ready for retirement only focus on capital appreciation, which is fine, but it's not going to do enough to help you continue to live that lifestyle that you're used to when you're retired. So capital appreciation is one thing you definitely should be doing. Dividends is another one, right? Dividends is the second one. And then start adding things like selling options, these covered calls, to start to compound things. All right, so there, as I said at the very beginning of today's session, there's 9 things to be looking at. What we're looking at right now is just the 3 simplest things you could be doing: capital appreciation with good stocks, dividends, and selling covered calls. All right, so here's an example. This is an example from DHR. It's from some time ago, but it illustrates the power of doing all 3 of these things. So DHR at the time was a very high safety stock. And let's just say you had 100 shares of it. All right. Over time, high safety stocks tend to go up in price, which is good. You see here, relative safety, 1.47. So now you've got 100 shares. Now you got 100 shares of DHR. Over that time period, the stock, just capital appreciation, was up a little over 6%. All right, that alone is good. But since you also got a dividend-paying stock, it paid you a dividend throughout the year. It had one of the highest dividend safety ratings in the database. Right? At the time, it had one of the highest dividend safety ratings. So you were eligible for multiple dividend payouts throughout that year, which added another $54 in income on that 100 shares. Every little bit counts, right? Now, in addition, since you owned 100 shares, think about this. You could then say, hey, I'm going to sell covered calls. I'm going to keep selling covered calls against this stock that I own and collect rent. Collect income from the stock that's already sitting in my portfolio. So think about this. January 13th, you sell a covered call, you get $70. Then a little while later, you've got March 23rd, you sell another covered call, $143. Then you do another one, another $123. You do another one, $210. You get the idea. This is a stock that you already had in your portfolio, and you're just using it to generate more income by selling covered calls. All right, so let's look at this way. If all you did was focus on stocks that didn't pay a dividend, let's say, and you did not sell covered calls, you would have gained $551. That's good, right? And you made $551 in capital appreciation throughout that year. But if you found a stock that paid a nice dividend, you now bumped it up. Now you're up to 592. All right, well, if you add in the covered calls, I mean, look at this. Now you've added another $546. Now you might notice that I did subtract out, you know, the last dividend payment. You might not have caught that, but don't worry about it. But look at this, the difference between just capital appreciation, and if you start to learn these other techniques, just these base techniques of covered calls and dividends, you can basically double the return in that same stock throughout the year. That's how we're really ramping things up. It's growth in income, getting closer and closer for retirement. So this is another piece that you need to be doing to have that safe, steady, or safe, secure retirement. Now the last piece here is all about preservation. It might even be the most important piece. Probably is. Take the word probably out. This is the most important part. Preserving what you've got. You've got to protect your assets. Hope you like the picture. All right, so you always need to be thinking about making sure you protect your assets. Earlier we talked about how you do that right from the start by buying those safe stocks. Now you need to think about what to do once you own the stock. You want to insure yourself. You want to make sure your portfolio and your stocks are protected just in case either one of them starts to fall. So today we're going to focus on using an option trade called a put and using it for protection. We're going to actually look at a couple of examples, but let me give you an overview of what buying a put means. So this is the base concept of a put. So let's say you had TXN, right? Here's TXN in your portfolio. Let's say you really wanted to be defensive on it. Right? Maybe you bought TXN back here and you wrote it up, and now you're like, oh man, I just have this huge gain in this stock. I got to become defensive. I'm going to buy a put. All right, well, a lot of people say, all right, well, where do I buy my put? Well, the price of your put, think of it as an insurance policy, is going to depend on where you set your strike price. So you could buy a put here, kind of like right where the stock's price is. It's going to be a little bit more pricey. All right. You might buy a put down here. It's less expensive, but you're not getting as much protection. All right, so let's look at this in action. All right, we're going to look at this in action. So here's our case study. We're going to look at two case studies. This one's going to be an earnings. So do you guys worry when earnings comes about? When earnings comes up for the stocks that you own, are you like, oh man, should I sell my stock? What do I do? And a lot of people just go out there and they just sell their stock. Well, what we say is when earnings is coming up, you've got to do something. You've got to do something when earnings is coming up. So here's a case study of TXN when earnings is coming up. All right, and how you could use a put for protection. So in this example, you bought TXN on November 24th due to the confirmed up signal. All right, so here's a confirmed up call. Let's say you bought this stock. And then as of January 17th, you had a gain of 20%, which was roughly $2,000. All right, so you're sitting there with a $2,000 gain. And now you're sitting there 1 week prior to earnings. And you say, you know what? I want to protect my gains. I don't want to have the stock go against me and watch all my gains go away. So what you would do is about a week prior to earnings, you want to protect those gains. So in this example, you'd buy a put. Now the cost of the put is $423. So you're basically spending $423 to insure your position, to insure your $2,000. Well, what happened? Well, a week went by. You can see the week went by, and it actually gapped down on earnings. It gapped down. So your put increases in value, offsetting the losses in the stock. So if we look at it this way, let's put some numbers to it. All right, had you not bought the insurance, you had your $2,000 gain, right, on your stock. After earnings, if you just held the stock, half of it got wiped away. Right? So now you're just at $1,000. So $1,000 of your profits are gone. All right, so had you bought an insurance policy, so you had your $2,000 before, and then after, all right, your stock was down to 1,000, but your put made you 700. So you only went from a $2,000 gain down to a $1,700 gain. So you only lost 300 of your profits because you knew how to insure yourself. Okay? You drastically minimized your losses. Right? So you had a 20% gain. It could have gone down to 10%, but since you knew how to buy insurance, it went from 20 to 17. Now this one could be huge for you. A lot of you are sitting there looking at the market right now, and you're like, wow, I wish I had a way to protect my overall portfolio. Well, here's a case study on a market correction from just this past year. All right, so last year, around the same time, the market did this. You remember this from last year when the market dropped like 20% at the end of the year? Right, during this time period right here. So let's zoom in on this period here. So this is just zooming in to that time period there. Well, if you look over here, VectorVest had a confirmed down signal. Well, when you see a confirmed down signal on the market, you could be thinking, all right, well, let me get some protection. Let me become defensive and buy some puts on the SPY, which is just the S&P, as an insurance policy, just in case. Right? You're not hoping the market goes down, but if it does, you're becoming defensive. So again, the confirmed down call was there. Now, if you had a $100,000 portfolio, you would buy 3 puts, right? 3 SPY puts. Now, at the time, each one of them cost $600. Let's just call it $600, which means your insurance policy cost $1,800. All right, so you have a $100,000 portfolio that you want to protect. So you spend $1,800 on your insurance. Just like a car, you might have a $50,000 car. You spend $1,000 each year or more on insurance, right? Well, what happened? At expiration, your puts, in this example, had a profit of over almost $12,000, offsetting any those losses in your portfolio. Now, how huge could this be for people? Well, we got an email from Elaine, who a year before that, when the market corrected, he wrote to Jim and he's like, hey, Jim, because of your teaching, I hedged my portfolio, and at the end of January 2018, with puts on the SPY, it saved a section of my portfolio. I invested $835 in insurance, and then I closed my puts in February for $23,000. He says my portfolio was not only saved, but it was brought positive. All right? That's how huge that this could be for you. You know, this is what Elaine did. He bought the puts over here, right around in this time period. The market dropped, and it protected him. That's what it's all about. So you've got to, one of the things you need to do as a retiree is know how to do these protection mechanisms, techniques, so that instead of having no protection, you know how to protect yourself. Protection is another necessary piece to retiring with peace of mind. Now, remember at the very beginning of today's session, we laid out these 9 pieces. Right, at the beginning, we wanted to show you how to get a retirement that gives you peace of mind, which is that POM. To do that, you got to focus on the way you profit, the way that you provide, and the way that you preserve. And at the very beginning of today's session, you gave yourself check marks next to the things that you're currently doing. You know, the things you're doing well. The less check marks and the more X's that you had, the harder it will be for you to get to peace of mind. Now, the more and more check marks that you get, the easier it will be for you. And today, we talked about 3 core strategies that you need. You know, buying good, safe stocks, using dividends and covered calls, and using puts for insurance. So if you follow these strategies with proper discipline, these are the things that we looked at today. You could profit using a growth portfolio focused on those high safety stocks. Not only that, but you can have a portfolio that's generating income through dividends. And you could also be selling those covered calls against it. And you'll have a way to preserve your capital. You know it's safe. Now, at the beginning, I had said that we were going to show you where to go to get more help. I'd really like to do that now, if that's okay with you. So to help you get the results that you're looking for faster, what we've done is we put together a 6-week course that gives you heaps more detail, right? All 9 boxes, basically. So even though we've gone over a lot today, we've kind of scratched the surface, right? So what we've done is we put together a course called the Ultimate Retirement Solution online course. Right? It is designed to take you by the hand and guide you through the method that you need to grow and protect your retirement account and retire with peace of mind. Right? As I walk you through it, I want you to see how the modules will fill in the check marks that you might be missing. Okay? There's 6 modules, and the best thing that we found is just break it down by module. All right, so if you want a way to fill in all the check marks, this is what we recommend that you do. Now, some of you, if you're not in that case, this might not be for you. We feel a ton of you probably are in this case, and it's best for you to take this course. So module 1, we call it win before you begin. Right? This is where we're going to get you clear on your objectives. Right? Once your objectives are known, we'll map out your strategic game plan to accomplish those objectives. Right? In this module, you'll set goals and objectives to hit the target, develop your management style, and learn the 3 core portfolios that you're going to be using to accomplish the objectives. That'll allow us to move to module 2. And then Jim's going to get in there and he's going to show you how to build your growth portfolio. In order for your portfolio to steadily grow every year, you need to fill it with the right stocks. Again, we scratched the surface today, but in this module, we'll show you how to complete the first of those 3 Ps, the profit side. So we're going to show you how to quickly find and identify the right stocks, the good safe stocks, the right time to be adding them, which we didn't really have a ton of time to get into today, but the right time to be adding them to your portfolio. And as I remember, Ruben asked me about this in the chat box earlier, we're going to be showing you how to set the right stops for those stocks. Okay, how to set the right stops. That's the P side, the profit side. Well, what about income? Well, this is part 1 of income, building a dividend portfolio. Every little bit of extra income matters, right? And dividends are something every retiree should take advantage of. So in this module, you'll begin to fill in the second P. So you can begin to turn on the tap for additional income. So you're going to learn what makes a quality dividend stock, how to quickly find great dividend stocks, and how to set the right stops for your stocks. All right, well, let's continue on the theme of income. This is the provide side. So modules 3 and module 4 are all about provide, because every retiree needs additional source of steady, reliable income, because banks, bonds, and Social Security won't be enough. In module 4, we'll fill in the rest of the second P, which is provide, so you have multiple sources of additional income. So you're going to learn what a covered call is, how it works. Today, we really just scratched the surface on covered calls. This module is going to go into tremendous detail on what it is, how it works, when to use it, how to implement it to generate income, how to set it up the right way, and everything. Module 5 is when we get into preservation, the strategic defense system. A lot of people don't have a plan for when the market or stocks go against them. You don't want to just sit there and worry about what could happen. You need to take control of the situation. In this module, you'll complete the third P, the preservation side, so you know how to protect and defend your capital and have a plan in place that allows you to sleep soundly, right? Knowing that your hard-earned money is safe. So you're going to learn what to look for to know when to become defensive, You're going to be taught the two best techniques to defend your stocks and your overall portfolio, and how to insure your portfolio with little to no money out of pocket. And then it's all about implementation in Module 6. Because education is great, but we don't want to just give you the education. We want to help you implement what you just learned. So implementation is what it's all about. In this module, we'll take you all the things that you learned, show you how to put the 3 P's into practice. So you're going to learn how to build and manage your retirement growth portfolio, how to set up your income portfolio for consistent monthly income, and you'll get step-by-step checklists so you manage your portfolio confidently. So not only in these do you get these modules, which will teach you all these things. What Jim's going to do, right, so what our entire team is going to do, and it's going to be led by Jim Penna, is every single week he's going to get together with you on a live mastery support session. So this is a bonus for signing up for this course now. There is going to be a live session every single week guiding you through each one of those modules. So you'll watch the module, write down any questions you've got, bring those questions to the mastery session so Jim can get in there and keep nudging you down the road, helping you implement those techniques. All right, so he'll be there to guide you through the entire process. Now, just so you know, if you can't make those sessions, it is no problem. You'll be able to submit your questions ahead of time. We'll give you a private email address that is going to go directly to Jim and his there's a couple of members on Jim's dedicated team. It's going to go right to the Ultimate Retirement team. You can submit questions in advance. He can reply to you via email or answer your question in the in the mastery session. And that way, when you go back and watch the recording, you'll hear him answering your question. Okay? Now, the next bonus that we've got is going to be, kind of like one of my favorite bonuses, by the way. And that's actually, hold on one second. My slides kind of just froze a little bit. Give me 1 second. Where are we? There we go. The second bonus is going to be where you're going to get access to Jim's Ultimate Retirement Coaching Group. All right, you're going to get 6 weeks of access to the Ultimate Retirement Group Coaching. All right, so let me just make sure my screen is showing there. Hopefully it's unfrozen. There we go. 6 weeks access to, there we go, the Ultimate Retirement Group Coaching. This is huge. I didn't want to bypass this because this is where we're going to pre-register you for our weekly sessions that Jim does. It's a class that's held every Tuesday. Jim is going to give you weekly updates on each one of the retirement portfolios that he tracks. He actually manages this portfolio, and you're going to see what he's invested in this paper portfolio. It actually tracks it in Thinkorswim. He'll show you a weekly covered call trade. I mean, it's just a huge bonus that comes with signing up for this course. All right? In addition, we really want to ramp up your income. So you're going to get a bonus module called How to Trade Spreads for Monthly Income. This is going to be taught by our lead options income coach, Ron Wheeler. Right? How to trade spreads for monthly income. You're going to learn what a spread is, how it works, how to set it up, how to manage it, right? All in one bonus module. So if I were to recap this, the total value of today's offer is over $2,400. So, I mean, you get the full course, the mastery sessions, VectorVest if you don't already have it, the bonus module, the group coaching that Jim does. If you order before the end of today's session, we have a special deal for you. Because, after today's session, we have a rate of $5.95. But we're not going to have you pay $5.95 right now because you've stuck with us for this past hour. If you order before the end of today's webinar, not Ubinar, how about that? If you order before the end of today's webinar, you can get it for just $4.95. Let me just update that. You can get it for just $4.95. Now, just so you know, the price will go up to $595 after today's session. Right? After today's session, it'll go back up to $595. The price will go up to $795 next week, so now is the best time to get in. So that means you're going to get the full course, 1 year of access to the course, the live mastery sessions, access to the software. You're going to get the retirement coaching that's done every week, all for just $495. Right? But it's only if you register before the end of today's session. And by the way, money back guarantee. Yeah, so this takes all the risk out. Right? You go through the entire course. And if you're not satisfied that we showed you how to get that peace of mind, I should say, in retirement, just let us know. We'll give you all the money back that you paid. Now, you do have to go through the course, because we know if you do the course, you'll see the results. But if you go through the course and you're like, you know what, I want my money back, we'll give you all your money back. So there's no risk at all. Just ask yourself, what would it cost you if you didn't do anything? I always like to say, what's it going to cost you if you did nothing? So it's not too late. Some of you think, hey, I'm already retired. It's too late. It's not too late to learn how to do this, especially the income part of things. Right? Starting to generate that income now. All right? It's not too late. So again, if you order before the end of today's session, it is $495. All right? If you order before the end of today's session, it is $495. Let me just put that up there we go. It's VectorVest.com/URS. I believe Jim, we didn't put that into the chat box for you. www.VectorVest.com/URS. There we go. You can click on the link in the chat box. That $495 rate is actually lower than our elite pricing. One of the most common questions we get is, how much is it for our elite members? Right now, the $495 is lower than the elite rate. The elite rate is $497.50, so you're saving yourself a little bit, because the regular price of this course is like $995 or so. All right, so now is the best time to get in. All right, so just go to VectorVest.com/URS, get it for $495. You will see a page that looks like this. Let me just go to this next page here. It'll say Buy Now Bonus. You do not need to type in a discount code. There's no discount code needed. You should see a page that says Buy Now Bonus, $495, $495. All you need to do is fill in this stuff over here. All right, so again, it's VectorVest.com/URS. You get all 6 modules. You get all the bonuses that I just mentioned. Again, VectorVest.com/URS. If you order before the end of today's session, it's only $495. And we'd love to work with you. We really think it'll help you out and help you get to that peace of mind and fill in those 9 boxes so you have 9 check marks. All right. So I see there's a bunch of questions that come in. Before we do that, of course, it's been an honor that you decided to spend the past hour with us. All right. And I'm seeing some people saying, oh, it's not showing $495. Let's go to that. Let's go check it out. Let's see what you're seeing on the page. So this is my good old Google, www.VectorVest.com/URS. All right, so the first page it'll probably say $595, but let's click the register button. There we go. You got to click the register button. So you probably see a page that looks like this. It'll say $595. Just click register and you'll see $495 Buy Now Bonus. Sound good, everybody? And you don't need a discount code. Just fill in the details over here and hit register and you'll be all set to go. All right. So let me go back over to here. All right. So if you have questions, first off, if you're in, let us know. Jim and I are here. Just type in, I'm in. Let us know that you've joined us. You're ready to start. Class starts. The modules will be released next week. Module 1 will be released next week. Jim's first live session is the week after that. Let us know in the chat box. Just say, hey, I'm in. And while you're doing that, I'm going to jump in, answer questions, help you out, I see a lot of you have been typing in questions in the chat box. Jim's been answering them already. I see a couple already are saying, I'm Zachary, welcome aboard. Gary, those of you who are typing in, I'm in. I just noticed Boyce had typed in, I'm registering now. I'm in. I'm registering. Jerry, if you're an elite member, this $4.95 price is lower than the elite rate. So for now, if you just go to that website, you'll get a cheaper price than the elite price. Now, if you wait, the elite price is $497.50, I believe. All right, Jason, welcome aboard. Those of you who are in, you're going to get an email from us with all the details. It'll have all the dates, all the times, the link to the course. It'll have everything in that email. So please check your junk or your spam folder if you don't see it in your inbox. You probably saw a page pop up with all the details, but we're going to send you all those details, and then we're going to get the first module will be released next week. You'll get an email about that. Then you'll get auto-registered into all of the live sessions that I mentioned coming up. All right, so let me take a look at some of these questions that came in. I see, Ralph said, hey, the registration page says $5.95. Yep, just click the register button. It'll say $4.95. Jamal says, does it include printed materials? It sure does. You get to all the slides. There's a color version. There's a black and white version. There's checklists, cheat sheets. There's tests. So Jamal, we got you covered. Tom says, when does it start? Let me just show you visually here. These are the dates of the live mastery sessions, Tom. Okay, so today is what? The 2nd? That's today, depending on if you're listening. Yeah, we're going to hold a webinar tomorrow too. But let's just say this is where we are now. The first module will be activated next week. I believe it's on Wednesday. Wednesday we'll activate the first module. That will give you almost an entire week to go through the module and listen to it and do the homework. And then we will have the first mastery session on the 14th. We'll activate the next module, and then you have a whole week to go through that. And then so on and so forth. All right. Hopefully that helped. Again, just go to vectorvest.com/URS and you can get yourself in. Next question. I see a couple people said the price was $5.95. Yep, it says $4.95. Just click on register. Let's see. Question I see. A bunch of people said I'm in. That's awesome. I think I read some of these off already. Jerry, Jason, Mark, Ralph. Great to have you on board. Janky says, is there access to VectorVest? Yes, if you don't already have VectorVest, you'll get 60 days, 60 days or the 6 weeks of the course. I believe it's 60 days of access to VectorVest. Jason says, does this program work well if you are self-managing your 401k? And Jason, you probably saw Jim responded to you in the chat box. He said, if your 401k allows you to buy stocks, then yes. Because some 401ks only allow you to hop from one mutual fund to another. But if you can self-manage your 401k, yeah, you could be buying and selling the stocks that we're talking about here. Yeah, Ruben. Now, Ruben, you and I had that long conversation yesterday. Ruben. You're going against what you told me yesterday. Hopefully you get a laugh out of that. But Ruben, you're ready for the next step. So Ruben, if the confirmation page disappeared after you hit the register button, like Jim typed to in the chat, give our team a call and they can help you out with that. Jerry, if you call our team, they could let you know if you're an elite member. Our phone number, I'll put it in the chat box. It's 888-658-7638. I just give our team a call. If you've been with us for like 5 consecutive years, or I think if you've spent over $5,000 with us, you're an elite member. But just remember, Jerry, right now the price of $4.95 is lower than the elite price. So if you do it now, it doesn't matter. You can get the lowest price possible. Elizabeth, welcome aboard. Great to have you in the class. AG says, are the mastery sessions recorded in case we can't make the live session? Yes, AG, they are. And that's a great benefit because you can watch it over and over again. Yes, definitely. And don't forget, AG, you could submit questions in advance to Jim and his team via email. Robert says, when will the sign-up page appear? Robert, just go to www, and we could do this together, Robert. So pull up a web browser, Robert, and just type in www.vectorvest.com/URS. We also put a link in the chat box for you, Robert. Basically, right above where you typed us your message, there's a link. So if you type in /URS after VectorVest, it'll show up here. And you can see the special price of $5.95, which that'll be the price after today's webinar. That's only good for 5 more days. But if you click register, you're going to see that the $4.95 price that we talked about just now is there. Jamal says access to Canadian and US stocks and vectors for the same price. If you live in Canada, Jamal, we give you access to vectors US and Canada for the same price, yes. Liza, if one misses a module, the modules are pre-recorded. All of those modules that we talked about, let me just show you here. All 6 of these modules are pre-recorded. We release one module every week, so you can't miss a module. We'll release one every week. And then the mastery sessions, these are the live ones. If you miss one of those, we will give you a link to the recording of those. And if you miss one of Jim's Tuesday sessions, we will give you the recordings of those. It's all in one spot. It's a service called Digital Chalk. That's where you will go to access this course. Bob, that sounds like a good plan. You know, finish one thing, then start another. Kenneth, I don't know the answer to that question. Kenneth, if you call our team, I put the phone number in the chat, they could check on that for you. AG says, I'm in. Welcome aboard, AG. Great to have you. Boyce says, I just registered. But will this webinar today be available for replay? Yes, Boyce, probably sometime tonight you'll get an email with a link to the recording. Melanie says, I just registered with a big exclamation point at the end. Welcome aboard, Melanie. Boyce says, I want my wife to watch it. Cool. Reg says, I registered. Welcome aboard. Jamal says, okay, just registered. I look forward to this training. Yeah, you're in really, really good hands with our entire team. But as you heard from Jim today, I mean, Jim's going to be the primary guy. There's no better guy to be guiding you down this path than Jim. You know, he and I went back and forth in today's webinar, so you obviously heard him. But with the experience that he's got, and the feedback we get from his students is, and I'm sure you're going to feel this too, Jamal, is just the caring. And hopefully he doesn't mind me saying this. I know he's on the line listening. The care that he's got for you to make sure that you succeed, I'm sure will come across to you in those webinars. So you're in great hands with Jim. Sam says, how long does each module take to complete? I say that the modules are, Jim, the modules themselves, I believe they're between 60 to maybe 90 at the most, wouldn't you say?
Yeah, 90 would be certainly the longest. Usually somewhere around about an hour.
Okay. And then you, of course, Sam, Jim will get with you on those mastery sessions. So if you're looking for the week, let's just map it out for you, Sam. If I get rid of all my little drawings here. for the week, there's going to be some significant things that go on. You're going to watch the module, so let's say that's 60 minutes. You might have some time to do the homework, maybe dedicate about 15 to 20 minutes to do the homework and the test and all that. Then there's the mastery session, so there'd be about an hour there. And if you did want to come, and I do encourage it if you can, to Jim's Tuesday session that he does with his coaching clients, people who've already gone through this training. If you can come to that, that'd be great. It's an added bonus. It's not mandatory though. But let's just say throughout the week, 2.5 to 3 hours to dedicate to go through the material. Jamal says, wonderful. Zachary says, I'm registered and ready to get started. That's awesome to hear, Zachary. Jason says, look forward to the program. Have to sign off. I understand, Jason. Take care. It's great having you here. Yeah, Ruben, they said that you were not registered. They could have done it through talking to you on the phone, or you could just go through the website too. Either way, Ruben, if you're still on the phone with them, they could just do it for you over the phone. That'll work. Lost my train of thought there. All right, so remember, the $4.95 price is good while we're live right now. All right, so you have about 60 seconds because I don't see any more new questions coming in. So 60 seconds to type in your last question. Drum roll. I'm going to grab a quick drink while you do that. All right. Well, on behalf of Jim Penna and myself, it was, like I said before, it was an honor having you here and an honor to be able to do this with you today. We look forward to working with you in the future. And if you have any questions, don't hesitate to reach out to us, and we'll help you out the best we can. Have a great rest of your evening, and we'll talk to you soon. Bye, everybody.